What if everything you think you know about government spending is backwards? What if the real story isn't about budgets, taxes, or elections, but about a silent decision made decades ago? A decision that traded your future, your children's future, and even the stability of entire nations, all to keep the present looking stable. Because somewhere along the way, the world's governments realized something terrifying. They could no longer afford tomorrow, so they began borrowing it. And today, we're living inside a global system built on future time, future labor, and future money, a system that must keep growing to survive, but cannot grow forever. This is the story of how governments quietly sold the future, and why the bill is finally coming due. To understand how the world got here, we must travel back to 3 turning points. 1790, the invention of national debt as a permanent tool. 1913, the rise of central banking as the lender of last resort. 1971, the death of the gold standard and the birth of infinite borrowing. Each step reshaped the world, but each step also created a hidden dependency, a reliance on debt to keep economies alive. From Alexander Hamilton to the Bank of England, from the Federal Reserve to the IMF, from Bretton Woods to the petrodollar system, the deeper you dig, the clearer it becomes. Debt didn't just fund nations. Debt became the lifeblood of governments. And eventually, the only way forward was to borrow even more. But how did this evolve from a tool into a trap? In the late 1700s, governments discovered a powerful trick: borrowing money today and paying it back tomorrow. It started harmlessly to fund wars, build roads, expand territory. But with borrowed money came borrowed expectations. Debt created a faster present, faster armies, faster expansion, faster progress. And nations realized something dangerous. Debt could buy power. Debt could buy time. Debt could buy loyalty. By the 1800s, Britain had mastered it. The British Empire ran on a global credit system backed by the Bank of England. It was a first world power fueled not just by resources but by leverage, and it worked until the bills came due. Entered the 20th century. World War I, the Great Depression, and World War II shattered the old world order. Economies were devastated. Nations were drowning. To avoid collapse, countries turned to the one tool that seemed limitless: borrowing. In 1944 at Bretton Woods, the US dollar became the world's anchor. Why? Because America held most of the world's gold. But here's the twist: governments didn't want gold. Gold limited how much they could spend. They wanted something elastic, something expandable, something they could control. And so began the quiet shift from sound money to soft money, from savings to borrowing, from value to promises. By the mid-20th century, debt wasn't just funding crises, debt was funding lifestyles, social programs, infrastructure, wars, healthcare systems, all of it financed by borrowing from the future. The moment everything changed came in 1971, when President Richard Nixon ended the dollar's convertibility to gold. One decision, one announcement, one press conference, and the world's money became backed by nothing but trust, or more accurately, debt. From that moment, governments no longer needed gold. They no longer needed limits. They no longer needed discipline. They could print as much as they wanted, borrow as much as they wanted, spend as much as they wanted, and they did. Global debt exploded. 1970, $2.5 trillion. 1990, $27 trillion. 2020, $255 trillion. 2024, over $300 trillion. The future was being consumed at a speed humanity had never seen. Because once you remove limits, once you detach money from reality, there's no going back. Fast forward to today, governments run on deficits. Countries borrow money they don't have to pay back debts they can't afford. Interest payments now exceed education budgets, healthcare budgets, even military budgets. Here's the uncomfortable truth: most nations aren't paying their debts, they're paying only the interest. This is the modern financial treadmill. Borrow money, spend money, borrow more money to cover the old debt. Hope the economy grows fast enough to make it look sustainable. But what happens when economies don't grow? What happens when populations shrink, when productivity slows, when trust breaks? Debt becomes a trap, a silent chain connecting future generations to promises made long before they were born. And some countries are already trapped. Japan, debt at 260% of GDP. Italy, 140%. United States, $34 trillion and rising. China, regional debt crisis mounting. Developing nations crushed under IMF repayments. The present has become so expensive that the only way to keep it alive is by sacrificing the future. Over the last 50 years, nations have tried everything: raising interest rates, cutting spending, printing money, quantitative easing, stimulus packages, bailouts, austerity, tax increases. None of it worked, because none of it addressed the root problem. Governments overspent the present by borrowing the future, and now the future is too small to pay it back. Every fix only delays the reckoning. Every solution deepens the dependency. When a system depends on growth, but growth slows, the machine eats itself. History is repeating in real time. Ancient Rome debased its currency, gives collapse. France printed assignats, gives collapse. Weimar Germany printed marks, gives collapse. Zimbabwe printed trillions gives collapse. Sri Lanka borrowed endlessly gives collapse. Today, the same patterns appear everywhere. Housing crises built on cheap debt, youth trapped in lifelong student loans, nations funding wars with borrowed money, central banks propping up markets with printed money, governments hiding deficits behind accounting tricks. The numbers are unmistakable. For every $1 of real growth, we now create $3 to $5 of new debt. The system is no longer producing prosperity. It is consuming it. 1. Debt is no longer a financial tool. It is the foundation of modern government. The system depends on perpetual borrowing just to survive. 2. The future has already been spent. Most of the wealth promised to the next generation was used to stabilize the present. 3. History shows no debt-based system survives forever. Every empire that relied on borrowed time eventually ran out of time. A warning. The illusion of stability is fading. The numbers can no longer be hidden. And the governments that sold the future are running out of future to sell. The next decade will reveal how much of the present was artificially kept alive and how much must now be paid back.